Today, we have the Neal Bawa, who is the mad scientist of real estate. If you've not heard of Neal Bawa and you're in commercial real estate, then you've probably been hiding under a rock somewhere. Let me tell you just a little bit about who he is and how incredible his view on the world is and what it matters. So Neal Bawa is the CEO, founder at Grow Capita and Mission 10K, two commercial real estate investment companies. Neal's companies use cutting edge real estate analytics technology to source and acquire or build large commercial properties across the US for over 1,000 investors. Current portfolio is over 4,400 units with an asset under management value of over $660 million. Neal shares his team's unique and cutting edge real estate data methodologies to connect with geeky and nerdy, or just data driven investors like ourselves who share his vision. That data beats gut feel by a million miles. Over 10,000 real estate investors have taken his free real estate data analytics course on udemy.com, and the course has over 1,000 five-star reviews. I think the important thing here, Neal, welcome to the show. And like, how fast did you go from zero to $660 million worth of real estate?
Much slower than most people think because I started my first decade in real estate had no investors, right? So my first decade, most people start with real estate with, fix and flip or a rental. Those are the most common ways of starting. I started in 2003 with a 27,000 square foot built from ground custom campus, no investors, right? So I was running a technology company. We had lots of money and we were paying lots in taxes because we're in California. And so we decided, hey, we're just going to build ourselves a campus and we're not going to have any investors involved so we can keep all of the depreciation. And we did it. And it was very difficult because you were running a company with hundreds of employees during the day. And then in the evening, you'd sit down and basically do all of the architectural design, zoning, permitting, construction, working with builders, et cetera. And it was terrifying, but we learned a tremendous amount, especially because we were not afraid of making mistakes, and we made a bunch of mistakes, but there were no investors, right? So it was interesting. So I did that in 2003. Then we built a bunch of other campuses because once we realized that, all of a sudden we were making a lot more money because of the campuses and because of the depreciation, but we were keeping all of that money because the depreciation meant that our income was going down from a tax perspective, even though our actual income was going upward. So we're like, let's rinse, repeat this. So we built like 6 other campuses. Before we continue, let me take 60 seconds to tell you about Multifamily University. Are you ready to take your real estate investing to the next level? Look no further than Multifamily University. Our comprehensive resources, including guest podcast appearances, educational webinars, the Real Estate Trends Toolkit, and the Location Magic course, are all designed to make smart investing easy and accessible. Plus, with no subscriptions, no upsells, you can trust that we're always looking out for your best interests. But don't take our word for it. Check out what our satisfied customer, Carlos M., had to say. Neal's presentation was filled with invaluable information that is not readily available to the average investor. This group takes you to the elite level of investing. Join the ranks of the elite with Multifamily University. Join us at multifamilyu.com and start investing from a place of knowledge today. Not only will you have access to a wealth of knowledge from industry experts, but you'll also be able to stay ahead of the game with our in-depth analysis of market trends and potential recessions or corrections. Invest with confidence and make informed decisions based on data, not gut feel. Don't miss out. Visit us at multifamilyu.com today or click the link in the description below. And now, back to the content. And then 2008, I had plenty of money in the bank. Prices were low. My data was showing that it was the best time in 100 years to buy real estate. Everyone else thought that I was an idiot. And so I didn't have a lot of competition. So I was buying a single family home every month for years, like one a month, every single month for years and years and years for myself and my family. And I kept doing that even when, sort of when I moved on from that, I was still continuing to do that process. So I didn't really jump in until 2014 is the first time that I took in investors' money. So, 11 years of learning real estate, single family, multifamily, duplexes, triplexes, large multifamily, without taking anybody's money. And so then after that, when I got started, then it makes me look like I went really fast. But the fact is that those 11 years of experience really, really helped and taught me a lot of things. I made my own mistakes and, lost money on my own and didn't bother investors. So hopefully that's the answer to your question. I mean, we actually got to $1 billion in by 2021. And then since then we've been going downward. So we're now gone from a billion to 660 million because when you use assets under management, you can't talk about assets that you've sold, right? We've sold 9 assets that were worth about $400 million. So it reduced the value of our portfolio, which I'm very happy about.
Yeah, wonderful. I love that. So when did you realize that uh data was a thing that was missing, or when did you like you came from a data company, so clearly it's been part of your existence, but
Yeah, when I was 9, I was diagnosed as being autistic. I was taken to the army, to the Air Force hospital because my father was a fighter pilot in India, and they diagnosed me as being borderline autistic. And they said to my mom, who wanted them to give me pills, they said, no, don't give him pills. He sees the world in numbers, and these numbers that he's repeating, because I'd randomly start, spouting numbers are his measurement of the world. He's just measuring everything in front of him and it's all random stuff. So instead of, feeding me pills, they showed me how to separate the portion of my mind that's always calculating, the portion of my mind that's normal like everybody else. And so, already on this podcast, I've basically made 2 dozen calculations. They're mostly random and mostly worthless, but they train my mind for looking at everything from a data perspective. So it was no surprise that I got a computer science degree. No surprise that my major was data science. It's just something that is easy for me. And so when in 2008, 2009, when I had plenty of money from all the construction that I'd done and the depreciation benefits of that, and I was looking to invest, it was normal for me to ask the question, which is the best city to invest in? And I would go around asking people, and they would give me one of 2 answers. The first answer was, if you want to invest in real estate in 2008, you're the biggest idiot of all time. So I got that pretty often. And then the second one was, the best city in America to invest in is the one that I'm investing in, whoever that person was. And that I wasn't happy with that answer because they would always give me this very bullish picture of whatever city that they were investing in. And I would say, well, how about comparing this to this city? And they're like, I don't know even the name of that city. So it's like, so how could you know it's the best? Well, because I think it's the best. And so to people like me who are data driven, you're basically just prodding the snake by saying stuff like that, right? It's just and like I just got obsessed with the idea of no, there must be an actual answer to that question. What's the best city to invest in? So I started on a journey in 2009 to, well, late 2008 to get the answer to my question. And it's a answer. Obviously, as a data scientist, I know it's not the answer, but it's a answer. And the answer was Madera, California. And the answer changes every 6 months or a year, but at that point it was Madera, California. And how did I come up, with that answer? What I did was first I figured out how many cities there are in the US. Today it only takes 5 seconds to ask ChatGPT, but there's about 1,000 cities in the United States of a certain size. And anything beyond that is considered like a small town or a village. We don't have a lot of villages in the US. So you look at that 1,000 and then you were like, okay, where's the data for these 1,000? Well, as it happens, the data was already present. It was already public. It wasn't technically kosher to grab the data, but I wasn't trying to create a data science company and compete with somebody. So we did a lot of data mining. The Bureau of Labor Statistics website, which is bls.gov. We strip mined the predecessors of Zillow and Trulia and all of these sort of companies. They had, companies back then that were the predecessors. We'd basically write scripts. I mean, I'm a data scientist, so we would write scripts in a language called Perl. And these days it's called Python. But back then, we were writing scripts in Perl. So we'd basically data mine all this stuff and gather it together. And then we'd stick it into a statistical analysis software called R. The software is actually just called the letter R, right? So we'd stick it in there. And then we would start asking questions of that software. We'd say basically, we knew where home prices were going up, where they were going down. We knew where rents were going up, where rents were going down, because all of this is public data. And the questions we were asking is, what correlates, and this is the most important word in data science, what correlates the most to profit, to money? When you're trying to make money in real estate, you make money in rents and you make money in selling. So those are two things, and you can get that information fairly easily on the web. And then what you're saying is, what correlates the most to profit, to money? When you're trying to make money in real estate, you make money in rents and you make money in selling. So those are two things, and you can get that information fairly easily on the web. And then what you're saying is, I have all these other things like population growth, job growth, income growth, home price growth, crime reduction. What correlates the most to profit? Right? That was a question I was asking myself. And there were 50 other things like schools and all kinds of stuff. And the software is designed to build these correlations and to tell you what the correlation is. And a correlation that's closest to one is a perfect correlation. So a zero point 0.9 is a very high correlation, right? So what we found was the highest correlation was just five things. And then there's a whole bunch of other things that also correlated, but these five were the most important, right? So job growth, income growth, home price growth, right? Population growth, and crime reduction. And people are always shocked. This like schools are not in there. The answer is the crime reduction and schools have the same impact. So I might as well just take one and get the other. So we discovered that in 2008, 2009, and we were like, okay, so what do we do with this data? This is very useful. So I was running a large business which had big conference rooms, right? So 100 people conference rooms. So I was like, I've heard this thing about meetup groups, right? Maybe I should start a meetup group around data science. And I named I had some disgustingly awful, bad marketing data science name for my meetup group. And so the first time I did it, it was great because I was traveling from my corner office to 150 feet towards my conference room, where in the Bay Area, you have to fight through 2 hours of traffic to go to a meetup group. So I was really excited. Four people showed up. Four people showed up, right? But all four of those were data scientists, right? And they were rich, like they were working at Apple and making, $1 million a year through stock options. So we had this great conversation. So it wasn't a 1 hour presentation, turned into a 3.5 hour conversation where we were just talking and sharing data. And then they went back and referred a bunch of people. The next time I did the meetup, like a dozen people showed up. And the third time I did the meetup, over 100 people showed up with standing only room, right? I literally had to have people stand in the back. And what I was showing them is I was picking cities using my techniques and showing them how cities compared with each other, which cities were better than others for real estate investing, which ones would likely have rents go up, which ones would likely have home prices go up. And people were really transfixed by that. This is a like nerdy, geeky group. I mean, I'm in Silicon Valley, so you can imagine, right? You throw
Yeah.
a rock, you hit a nerd, and it bounces off and hits another nerd. Um, so there's all these geeky, engineers around, and they're just getting off on all this stuff that I'm talking about in my meetups, and I don't have any cost because I'm doing a meetup inside of my office. And so we're doing great stuff. And I'm eventually, basically, by using this database, I come up with this name, Madera, California. So I start talking about it in my meetings, and people are like, "Why aren't you buying there?" And I'm like, "I'm a little nervous, but maybe that's what I should be doing." So I go to Madera, California, and I buy one property, and then two, and then 10, then more, and just keep going, right? Because we have a lot of cash. And then all of these other guys, they start buying. One of them actually ended up buying 75 of them, bastard. And I wish I'd done that, right? I didn't have enough confidence. I had the money, but I didn't have enough confidence. But I think he still owns like 50 of them, and they were all 4 or 5 times the value, right? We were paying $90,000 for properties that cost $250,000 to build. So the math was saying you couldn't lose, right? You'd either win or
Mhm.
win big. Those were the only two scenarios that our software was pointing us to. And the reason we picked Madera, California, apart from those five things, was Madera had seen the greatest drop from 2005 peak to 2009 trough, right? And that drop was 71% from peak value to trough. And so our software indicated that whenever prices go down in a real estate crash, they always go beyond where they should go. They drop too much because of fear, right? Nobody buys. There's no buyers in the marketplace. So the prices should have dropped about 40% in Madera, California. That should have been the right price. But whatever had happened in that market, people were frozen. And so they dropped 71% from peak. And so we were just buying stuff left and right, constantly buying this stuff. And one day somebody comes to me and says, "This is really great. I mean, you're making money, I'm making money, everybody's making money. Why don't you publish this on the web? You intend to give it away for free. You're giving it away on the meetup." So I'm like, "So where on the web should I publish this?" And he says, "There's this website called Udemy, Udemy. There's like hundreds of thousands of courses there." So I'm like, "Oh, would people be interested in a real estate course, like a real estate analytics course?" He said, "Yeah, but you've got this dumb habit of calling everything data science, names. You've got to put on your marketing hat." So we brainstormed and came up with a name called Location Magic, right? How to figure out the best cities to invest in for real estate. So I was very, very proud of that. The first time I'd, done some marketing stuff. Um, and so I put this course on Udemy. Basically, I distill everything down into a step-by-step instruction set where anyone in 10 minutes can pick two random cities that they've never even heard of, right? It's like just totally random. And in 10 minutes, they should be able to tell which one of those cities is much better than the other one, right? So that was the goal. And it took me about a year to create a course that was so simple because fundamentally you're starting with something very complex and you're ending up with something very simple. And people have to be able to do it in 10 minutes, even though it was taking me, hours and hours to figure out how to distill it down that quickly. But we figured it out. So we put it on there, and I thought maybe like 50 or 100 people will show up. I was so wrong. People really want real estate data. Like there's so many people that are interested in it. So right now, if you go type in Udemy, UDMY, and then my first and last name, and you click on the first link, you'll see there's 13,000 people taking the course, right? 13,000 taking it right now. And they love it, right? I get thank you notes all the time from people saying, hey, for the last 6 years, I've been using this course to buy and I've made $1 million or I've made $2 million and 3 million. I don't know who these people are. They're not my investors, right? They're just people that have used this and went out, and many of them were far smarter than I was. I should have, I had the holy grail. I should have bought everything in sight, but I didn't. I bought plenty. So, it's not that I'm, complaining, but I should have gone a little bit further. But there were other people who considered me some kind of prophet, which I'm certainly not, right? I'm just sharing information. And they went out and bought crazy amounts of stuff. There's one guy who owns a, couple hundred million in real estate just based on the spreadsheet. It's bizarre how these people trust you. And I think the biggest reason they trusted me is I had no agenda, right? I was just giving stuff away. This was way before I ever asked anybody for money. But what had happened is over time, a community built up around me. All these conferences started calling me as sort of the token nerd to be on stage and share, information. They knew that I wasn't a real estate guy, so they were very comfortable putting me up there. And so by the time I actually got into real estate in 2014, there was a huge following of other geeks like me. So long, answer to your short question, but essentially data has been the very thing that's made me successful, right? It's the foundation of everything we do, but it's also the foundation of everything we've done.
So let me ask you a question. So on our, the people who tend to listen to this call or these pods are very interested in impact. We want to make a difference in the world. We want to improve society. We want to improve neighborhoods, communities, reduce crime, by cleaning up, some of this old crappy, slum lords have been running these places forever. How do we use data? How do folks who care about impact and improving the world by being good stewards of their properties, how do they use data to do that? How do we use data to drive impact and profits?
So, obviously, if you buy a building and you fail to do a good job with it, you probably won't get the chance to do it again. So when you're, fundamentally what we are doing is good, right? We are renewing the United States stock and increasing the life of these assets. So what happened is before the term syndication was a thing, before crowdfunding was there, a lot of these older assets would fall into disrepair, would become places that, were just filled with cockroaches and rats and all these kinds of things. And because of that, that it would get reused for some other purpose or people wouldn't live there, right? So the nation was not able to maximize its built units. And that's what we do. We buy these older properties and we improve the quality of these properties, which makes it, a far better experience for people that live there. And to do that, I think you have to be data driven in everything that you do. Firstly, don't make mistakes when buying properties. That's where data helps you to buy the right properties at the right price. Because if you don't and you overpay, then those investors are unhappy. They won't invest again in multifamily. They'll go out and invest in something else. Maybe they'll buy Bitcoin or invest in the stock market. And when that happens, it hurts the United States because there's plenty of people to buy in the stock market, but there's only a certain percentage of investors that invest in multifamily real estate. But multifamily is so important to the country, right? So you can't think of a lot of things. I think that if tomorrow we don't make toothpaste, it's okay because there's 99 other countries making, companies making toothpaste, right? It's a perfect market for toothpaste prices. That's not the case for multifamily. If we don't do it, if the money doesn't go in, we'll just end up with a bunch of useless properties, and then people don't get to live in a good place. So what we're doing is actually valuable compared to a whole bunch of other things that can be done. So use data to buy well, and then use data to manage well, right? So I'm very obsessed about asset management and managing my properties well. I find that the obviously in the last year or two, there's been more focus on asset management, which is wonderful to see. But before that, I just found that people were experts at buying properties, but not necessarily good at at managing them, right? So I have a lot more metrics on asset management than I do on purchase of properties, and I'm proud of that. Because I think that properties are inherently very difficult to manage, and I don't think that everyone does a good job. So I'm not meaning to suggest that people are not data driven on properties. I think most syndicators are data driven. But let me give you examples. Maybe this will sort of give you an example. So here's an example of somebody who's data driven. He or she meets with their property managers once in a week, and there's a report, the equivalent of the Monday morning report, and then look at physical occupancy and economic occupancy and those sorts of things. And they make comments and they push their property manager. That's a person that's data driven. But there's so many levels above that that I don't see people really going after, right? For example, I'll give you an example. One of the metrics that we use is called LASAL, 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 right? What does it stand for? It stands for leads, right? Appointments, shows, apps, and leases. Leads, appointments, shows, apps, leases. When you're fundamentally in the business of apartments, you are a salesperson. Your company is a salesperson, and your job is to sell your apartment rentals to people that are coming in through the door. So what I find is people are, constantly talking about things like rehab, and they're talking about, hey, how many leads did we get? But then I have not seen one syndicator at this point of time, and I don't have access to all of them, but I think by now I would know if there was somebody out there that actually tracks these 5 metrics and also the gaps between the metrics. Now I'm going to give you an example and it'll all click. Let's say you're getting 100 leads and you're getting 2 leases. Is that a good ratio? Is 100 to 2 a good ratio? Well, you don't even know the answer to that question if you don't track in the intermediate steps. So you have 100 leads, which is 100 tenants filling out a form somewhere on the web or saying on Facebook they want to rent. Then the next step is how many of these create appointments, which means that you should have a quota, right? A budget for how many leads do I get? How many appointments do those turn into? And what is the L to A ratio, right? So the L to A ratio depends on the quality of the assets, so Class A, Class B, Class C, and also depends on the market cycle. So for example, right now, Raleigh has 8 weeks of concessions because, there's too much new, stuff that's come in. So that ratio, the lead to appointment is going to vary, right? Because right now the tenant is in control. Whereas for most years, it's the landlord that has the pricing power. So you need to know your L to A ratio, right? So if it's 100 leads, how many apps do you need, appointments do you need to get, right? For most properties, it's 40 or 50. If it's 30, then you're not doing a good job. But most people are not reporting to you on a weekly basis. So you don't even know that if they're doing a great job. Now you've got the appointments, so 100 to call it 40. Now, how many of those should become shows, meaning people showing up at the property, right? So a common number for us is 16. So now you've got those 40 people that made appointments. Well, 16 of them have to show up. Are you tracking that? Right? Do you track it every week? Do you know if it goes up? Do you know if it goes down? Right? Now, those 16 people that are there, right? How many of those need to turn into apps? The answer is 8, right? So 8 people should turn into apps, right? So are you tracking that ratio, right? And how many of those apps should turn into leases? Very often, I go to an apartment complex and every single app turns into a lease, which means that their criteria is, do you have a pulse? Oh, great, you're qualified, right? So you should never, ever be in a scenario where 100% of your apps turn into leases. But that's very common. I see it all the time in properties, right? What that means is because your property manager knows that you're not looking at that ratio, you're not even aware of that ratio. As far as they're concerned, everybody's qualified. And if you once in a while come in and say, oh, this person doesn't look qualified, they have a credit of 500, they, blah, 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 blah. They're going to basically either say, yeah, that was a mistake, or they're going to say, yeah, you really were pushing us, and so this one time we just, made an exception. The person seemed nice, blah blah blah. No, if you go back and audit, they've been doing it all along. And that's why your economic occupancy is nowhere near your physical occupancy, right? This is a perfect example, but there's dozens of such examples, right? For example, I don't know of anybody that measures the pickup rate. So between the hours of, let's say your leasing office is open from 9 to 5, right? At that point, when an incoming phone call comes in, you should have a pickup rate of over 80%, meaning you pick up the phone, right? No property, I assure you, no property out there has an 80% pickup rate because you're not tracking it. So why would they have an incentive to have a high pickup rate? Now, after hours, you should still have a pickup rate that's higher than zero. Why? Because you should be incentivizing people, especially if your property is below 90%, to pick up the phone, right? By using what is known as rollovers. These days we have digital, PBXs, which means that the phone should ring 4 times in the leasing office, and then after that should roll over to a cell phone. And you might be like, yeah, but people are not required to pick up after 5 o'clock. Why not? Why don't you incentivize them? Why don't you pay them a bonus for picking up every call after 5 p.m.? Because time to lease, TTL, is magic. TTL of 1 hour, almost all of those are appointments. TTL of 3 days, the lead is worthless because there's already 2 appointments that have been made. The person won't even pick up the phone to talk to you anymore, right? TTL, time to lease. How many people track TTL? The only company that tracks TTL is my company, right? So what I'm saying is you can be data driven and everybody's data driven. But the question that Sam was asking was completely different. The question that Sam was asking is, how do you take that and evolve to the next level? How do you, get to an excellence level? Well, no different from anybody that's excellent at anything else. You have to do more than anybody else. So tracking these metrics today, there's no excuse. We use digital PBXs. They all track how many phone calls came in. They all track how many text messages came in. They all track how many of those were picked up. You already have the data. It's a matter of putting it together and then creating a dashboard that's visual. I do not allow any dashboards in my company that have tables or Excel spreadsheets. Excel is bad. Or, well, Excel is great, but not for me, right? I tell them I am the dumbest person in the company. And when people smile at that, I say, no, no. Repeat after me. I am the dumbest person in this company. And they're like, you are the dumbest person in this company? Yes, right. I'm a child. I'm 3 years old. You will feed me dashboards that are ridiculously simplistic. So they all have to be completely visual. Charts, bar graphs, pies, no data. Because I find that anytime I look at large spreadsheets, I'm just lost in the data. I don't know about you, but I'm lost. So I like to see bars that go up. I like to see little, lines next to the bars, right? So my standard for budget is bar and actual is line
Mhm.
next to each other.
With an
I
R
can tell
coefficient.
if a bar is higher than a line or not. It's simple and it takes me 5 seconds to do. I refuse to look at any data. That's not my job. That's a property manager's job.
So do you have that all roll up into Tableau or one of those type of systems, or you have
Correct.
the
We use Looker Studio, which is a free version of Tableau. Tableau is a paid software.
Mhm.
Looker Studio comes from Google, and we've never, even though there's a paid version of it, we've never felt the need to do it. We create, incredible dashboards all of the time, and for everything that we do. I mean, and I have like 6 of them open on my spreadsheet. I'm going to send a request. Sam just got the request,
Yeah,
and I'll
let's
just
see.
flash it on the screen for a few seconds, right? So you can get an idea about how obsessed we are with this, right? So look at this pipelines, right? Yeah, sure, there's numbers there, right? But the beautiful thing is, and this is KPIs, right? Dashboards, right? There's dozens and dozens of dashboards like this, throughout my company. And we're just always obsessed in creating more dashboards, right? We never stop, we never slow down. There's always a meeting every month about, okay, we have version 67 of this dashboard. What are we putting into version 67, right? Or version 68 or version 69, right? There's always got to be something that we're missing.
Yeah, absolutely. And what's interesting with what you talked about earlier, a few different points you brought up, if you knew what you knew now, right? Looking back, you could have made a ton more money. And then I love all these processes and things you've built out because we've found that as we talk to other syndicators or other investors that just aren't as savvy, they really are missing these data points or don't understand which ones to really pick. So my question to you is, over time, as you went from investing just your internally with working with investors, how have these processes changed internally with your company, with what you're looking at, how you're dealing with investors, really across the board?
They've evolved because they needed to evolve. One is you end up with too much process. So you basically can't just keep adding process, you have to cull them as well. Um,
Mhm.
and second is you run out of manpower, so you have to invest in either better systems that are automated, so you write a lot of scripts and do a lot of programming, or you have to invest in offshore resources. So I own a company in the Philippines with 25 employees. They're all full time. They all get, healthcare. They all get all of the benefits that, a virtual assistant doesn't get. So I'm able to hire the cream of the crop people and pay them, $7 to $8 an hour. There's no third parties. I don't work with any agency. They're all direct employees of my company. And I have very, very high retention rates because I pay them more than most people would pay them in the Philippines. And I give them benefits that they don't get at all in the Philippines. 4 weeks of vacation, for example. So by doing that, I'm able to get very high quality people in the Philippines. And those people are basically responsible for publishing all of those reports. In other words, you have people in the Philippines whose job it is to publish reports so I can keep an eye on what the people in the US are doing or whether they're doing things right or wrong,
That's awesome.
right?
Well,
And so those have evolved over time to answer your question to where not only are the people who fill out the reports in the Philippines, but now the people that make them are in the Philippines, right? And it takes time to do that. That's an evolution, right? Evolution 1.0 is there's a bunch of, people filling out Excel spreadsheets which feed into, these bars and graphs. And then the second evolution is there's a bunch of people who are actually creating all of these bars and graphs so that other people can fill them out too. And the third is there's project managers whose job it is that once these graphs and charts are filled out, when something bad happens, when something negative happens, when there's a downward trend line, then immediate action is taken. And all of those people can be in the Philippines, right?
we
Doesn't
love
mean I can
yeah.
get rid of my US staff. So, my US staff and Philippines hiring have been growing at the same rate. But I think that I find that any company that believes that 100% of their employees are in the US are nothing wrong with it. You're just making life very, very hard for yourself in terms of evolution, growth, even your existence is at peril because other people like me that believe the right ratio is 1 to 1. So my ratio is one American employee to one Filipino employee always, right? Full time. Everyone's full time. And I find that when I keep that 1 to 1 ratio as my company grows, I'm able to keep my efficiency higher than my competitors.
Interesting, Neil. I think we are almost at a 1-to-1, aren't we, Jesse?
Yep.
With
I think so. Not
Philippine,
on
yeah.
purpose, but I think it's the way it worked out because we just love working with these guys. And we've heard a lot of poor things about, virtual assistants and people just don't know how to work with them. And then if you spend the time and you find the right people, just like anything else, you vet them. We've had some of our best workers be in the Philippines or in India or elsewhere. Yeah.
Well, I think one of the things that I find that people, everyone that complains about virtual assistants is really not complaining about virtual assistants. They're complaining about laziness in writing specs. They're complaining about laziness in
100%.
doing their part of the job right, which I have to
Yes.
say was hard for me to do as well, but it no longer is hard because of the wonders of ChatGPT, right? So I find that one of the rarest uses of ChatGPT, one of the most powerful uses, but still rarest, is writing specs. So on the screen, I will share with you 2 specs that I wrote. Both of these, I had a conversation with ChatGPT and I wrote them, right? So carousel slideshow, call to action enhancement, objective, who are all the people, what are all the different things that are going to be done. I usually talk to ChatGPT for 3 to 4 minutes, then I tell it to structure it. So both of these were either, what today or or on Friday, I write specs at least 4 to 5 times a day. And they're very detailed because all you have to do, literally, all you have to be doing is tapping on the ChatGPT icon. And then I'll just pick one that I did so that you guys can see this. So this one says Oak Hills report spec. And if you go to the top, this is my initial blabbing. That's just me blabbing, talking. And when I'm done talking with, all of my lack of structure, it then converts it into something far superior. 3 to 4 minutes of blabbing, 2 minutes of editing this, and then 2 minutes to send it to my project manager. I never send any of my specs or specifications to any line manager. I send them to a project manager. That project manager is in Pakistan, and he creates a Slack channel. He posts my spec there, and he schedules a kickoff meeting, which is always 15 or 30 minutes. We go into the meeting, and the first question we ask everybody is, did you read the spec that was in the attachment for this meeting request? Sometimes people haven't. If one person says no, we cancel the meeting and say, let's schedule this tomorrow. Now they come back the next day, everyone's read the spec. So we say, do you have any questions? And rarely do they have questions because ChatGPT does a great job. At that point, the project manager is fine with moving ahead with these people. So now he's posting in Asana, which is our project management software, and linking it to Slack. So there's a Slack channel for the project, and everything's linked to Asana, and people are basically working on their tasks. And if they fall behind, then the project manager or his assistant, who is in the Philippines, posts a dashboard showing how many people are, behind on their tasks. Red is bad, green is good, right? And that puts a tremendous amount of pressure on people. And all I have to do beyond that point is just comment on that Slack channel. So at any given point of time, there's 150, 200 projects with their own Slack channels that are running. And all I'm doing is just commenting on Slack channels occasionally. I never have to worry about that this didn't get done. I don't have to worry about it not getting done in time. That's the job of the project managers. So I never send any of my requests to my line managers at all. Right? So you saw two that were both sent to a project manager in Pakistan. Pakistan, for whatever reason, has a astonishing array of project managers. We work with project managers that are PMBOK certified, PMBOK certified. So they've had 5 years of actual project management experience, plus they've taken classes, and they seem to have a shit ton of them for some reason.
Interesting.
Awesome. Yeah, look at that.
Can we shift gears just for a second? So this year has been crazy, right? So the market's been down. You have a presidential candidate who tries to get assassinated, or he doesn't try, but like people try to assassinate him. Like we've seen lots of ups and downs with the investor turmoil and investment, and the multifamily market has been in the tank. Talk to me a little bit about investor sentiment, and where are you going now to find investors, and how are you helping them feel confident in this very roller coaster time?
So, firstly, social media and the mainstream media are astonishingly good. They're absolutely brilliant at giving people bad news.
Mhm.
But they absolutely suck at giving people either balanced news or good news, right? If it's balanced or good news, it doesn't lead to increase in ratings, therefore you hide it, right? And social media does that, and so does the mainstream media. So our job as syndicators is to actually become the oracles of balance. We may not necessarily be smarter than other people, but we can be balanced. Do you know that my belief is, and the moment you hear this, you'll think that I'm, on, on something. We have been exceptionally lucky in the United States as syndicators for the last 18 months. Exceptionally lucky. The reason for that is, and again, I'm not, this is not a political statement. The last 18 months has been the largest delivery of new construction supply in US history. But rent growth in the last 18% was 1% positive. The only reason that was possible is because 5 million people came in through the southern border. The only reason.
Interesting.
If you listen to John Burns, they make a statement that I would like to repeat. 100% of the absorption in the last 18 months has been from those immigrants. 100%. And this is just something that we had no control over, right? So rent growth in the United States would have been 5, 6, 7, 10% negative over the last 18 months. And obviously some parts of the US have been negative, especially the Southeast. But overall, when you look at the last 18 months and you overall look at the United States, rent growth is 1% up. 1% is not a big number. It's a terrible number, actually. but it's up over 18 months, where it would have been down 10% if the Democrats hadn't been so outrageously dumb enough to just leave a border open, right? I mean, the shocking dumbness of what they did obviously lost the election, but it was incredibly beneficial for multifamily, right? I'm not a fan of doing that. If I was in charge, I would have closed that border, but I wasn't. But it was lucky. And once people understand that there's data saying that these people are helping multifamily, they achieve a sense of balance, right? We've been very, very lucky that this absolute tsunami, imagine a 100-foot tsunami of new supply coming in and somehow making it through that without all of us losing all of our properties. It's phenomenal. But you've never heard it before, right? So what I try to do is inject a sense of balance. I meet with my investors through webinars. I do 12 of them a year, and roughly 20,000 people sign up for these webinars on average. I also present my thoughts on podcasts, which I'm doing right now. And then I have my team grab the podcast and take either long chunks and short chunks and chunk them up and send them to my investors. And by doing that, I'm able to influence a very, very, very tiny portion of the US accredited investor community. Out of the 3 million, I'm probably influencing 8,000, right? But those 8,000 now have a balanced view of multifamily. So my long answer to your question is, at a time like this, you should be spending 5x the time on marketing, on balance, on telling people both sides of the story that you were spending in 2021. 2021, marketing wasn't even necessary.
Right.
Money was raining on us, right?
Yeah.
It was just raining on us. Today, that's not the case. So the amount of time that you should be spending, the amount of thought that you should be spending is a lot greater. And these people will thank you, because I fundamentally believe that the people that are buying properties today, they're getting a good deal. I don't know if it's a great deal, but I think it's a good deal. But investors won't tell you that unless you prove it to them, right? Every investor thinks it's a bad time to buy. But then every investor thought 2008 was a bad time to buy. I was going around and buying properties every single month, and I didn't have anybody bidding on those properties, right? So I think investors' track records of what they think and what actually happens is pretty bad. And it's our job to point that out.
Yeah, that's fantastic. So how are you acquiring new investors?
In the same way that anyone else acquires them, right? So all of the different channels, like social media channels, you've got to outshine other people because everyone else is posting on social, but you've got to do something a little different, something a little unique. You've got to do something that catches people's attentions. So we track everything. We track which of our, posts gets more attention, which of them get less attention, right? And we post something every day, but we really are thoughtful about the content. So for example, we thought that people, used to post text. That doesn't work anymore. We're attention deficit. So people started posting pictures. Well, now that doesn't work because we're attention deficit. So now we've started to post what we call carousels. So it's a photo with a little, sign, like an arrow. And when you click on it, it gives you a second and a third and a fourth and a fifth and a sixth piece of information. And we find that creates interaction. So we have full-time people. Here's another example. I like to show people stuff because it's hard to visualize, right? So here you see marketing, social posting. This is a Slack channel. And the purpose of this Slack channel is every day to post these kinds of things. And you'll notice that they all have arrows. Because now what I do is I basically take some long-form content and have ChatGPT do its things, give it to the social media designer, so she puts it together, and then we put it on there, and we're tracking everything. Like which of these things is getting a very high level of interest on TikTok or 20 other channels, right? LinkedIn is a great channel as well, and so we're constantly looking at that, right? So there's vertical versions, there's horizontal versions. I think that the honest answer to the question is what catches people's attentions, right? And you have to be constantly posting those things that catch people's attentions. And we do it in a variety of different ways. Webinars are something that we are very good at. So we do 12 bespoke webinars with 40 slides each, very good looking, very sexy looking. But I think what we also like to do is to post on social. So you notice I post on social every day. Just so you know, I have never been on social media. People think that I spend all of my days on social media. They're like Neal Bawa just, is on social media all the time. I think the last time I logged into Facebook was 2013 or 2014. I have no idea what the logins are, but I have staff and their job is to post. So I only allow them to give me articles on Slack and I comment on them through an audio snippet on Slack. Like if I like something interesting, if I see a different viewpoint from what the guy is saying in the article, and then they take the article and my piece and turn them into this stuff and they post it on social media. I'm very good at analyzing the results of what's happening on social media. How many engagements? What's the speed at which engagement's increasing? What's the growth of my database? But I don't have any intent of ever going and installing a social media app on my computer because I think that'll just distract me. I'm just focused on the result. And the result is show me my weekly dashboard of how my social media is doing. Why should I go post? Right? Even the responses to the posts are put in Slack and I respond to them right there because I can do that in 5 seconds and not be distracted. Sorry, they're just trying to give you, example ideas instead of just I see it. I sometimes I go to podcasts and I listen to them and they're too fluffy for me. I hate fluffiness. Everything has to be specific.
This is fantastic. I wish we had another hour to talk and go through things because just picking the mad scientist brain has been phenomenal. And I, I take this for what it's worth. My son is um, autistic or on that spectrum, and he is brilliant. Like taught himself how to read by the time he was 18 months old. Just incredible, and his mastery of the English language is
Right? Mhm.
just just like far superior than any of our other kids were. I I'm amazed at how you've been able to take that superpower and just embrace it and then and master it and be able to go out there and give so much back to the world. It's been just fantastic to watch you. I've been watching you for years now and silent listener back there, not commenting, just when I can pop in and listen to one of your great webinars that we can get access to and learn and grow. I just want to say thank you, for myself, from Jesse, from so many other people who are inspired by your approach, and uh, and I also recognize that I'm an emotional being, right? Like we love people, we love taking care of people, we want to make a big difference, and we there has to be balance with the data approach so that we can create more impact and make a bigger difference in the world, or else we just fail all the time and feel bad about it.
Yeah. And yeah, I appreciate that. And I think that it's exciting to share these with people. I don't think that I've ever, lost opportunities because of them. The more you share, the more you get because a bigger, community coalesces around you. So you get paid back in spades.
Yeah, absolutely. If 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 there was one thing you could say to other syndicators out there who are out raising capital, who are out trying to do the good work but are struggling to win, what would you say to them?
Have more confidence that this is a good time. It's not showing in what you're saying on social media. It's not showing in what you're saying to investors. This is a good time to be buying. So cap rates have already peaked. There's no doubt in my mind that next quarter, both CoStar and Yardi will show cap rates come down. Um, I think that the market has turned. I think that when today you're buying, I mean, you were fine with buying stuff in 2021 with 5% rent growth and 4.5% exit cap rate. Why are you afraid today when you're now saying, well, I'm going to exit at 6 cap and I'm going to use 2% rent growth? You're fundamentally much better. You're fundamentally much more conservative. Well, if you know you're being more conservative in your numbers, be aggressive in going out there and telling your story to investors. Any investor that listened to your story in 2022 should be listening now.
Absolutely. But they can't listen if you don't share the story.
And you have to really have confidence in your story, right? So today, the syndication community is far better than it was 2.5 years ago, simply because we've all learned from our mistakes. Hopefully, we've learned from our mistakes.
Yeah, absolutely. Absolutely. Another question we get from investors all the time, before the election, and we're going to wait till the election. And then now everybody's kind of, well, what's actually going to happen? What's being said publicly versus what's going to affect them. So, Neal, what I'd like to ask is pull out your crystal ball for us and tell us exactly what's going to happen in the next few years in the real estate investing world.
Um, I don't find these to be credible. I think that's just objections that investors give you when they're not convinced. Um, if you look at the last 7 or 8 presidencies, we've had both Republicans and Democrats, and no administration that I'm aware of has done anything to even begin to solve our health our housing problems. Some of them have made them worse for sure. So I could list a whole bunch of things that the last 6 or 7 presidents have done to make our shortage worse. But I would really, really struggle to come up with anything where they've done anything to fix it. The problem is housing is a fundamental need, but it is not as sexy from a culture wars perspective as trans people or gay people or black people or Latino people. Those are much more sexy, to get people angry and riled up. And therefore, there's much more time and focus spent by politicians on those. But anybody who says, I want to wait until after the election, my answer is, could you point out what, let's say, who are you expecting will win? Republicans. We think Trump will win. Okay. If you think Trump is going to win, could you point out to me a Republican president in the last 40 years that has done anything to solve the housing problem? One thing. Name one. That's the answer to the question. Oh, I like Democrats. What have they done? Democrats, I live in the San Francisco Bay Area. I can't even go to San Francisco because there's so many homeless. I'm afraid that I'm going to run one over with my car. What have they done? Right? Is there any indication that these people are actually going to resolve housing problems? And if they're not going to resolve them, then why does it matter? We fundamentally are in the business not because interest rates go up or down or cap rates go up or down. We're fundamentally in the business because there's a need, and that need is growing, and it's continuously getting worse because we are making no attempts to fix it at all.
Absolutely. Yeah, it creates a massive opportunity for us too, especially for us as impact investors when we go in to find these slumlords, these places that have been ran to the ground essentially, and we can go and fix them up and make them clean, safe, and affordable for the average people that need a home.
Again, since COVID, and this is a number that you can use for your investors, since COVID, the average American mortgage has increased by 111% in 4.5 years. 111%. The average American's income has increased by 19.6%. 111% increase in mortgage, 19.6% increase in incomes. As a result, we've now created 18 million new American forever renter families in just 4.5 years. What is Trump going to do to fix that? Doesn't even have a clue. And it's not Trump. The Democrats don't have a clue either.
That's our mission. Our mission is to create, affordable housing for 1 million people, and that's, what we're after. And there's a lot of data to support that, and we've been digging in, and it's incredible, the crisis. And it's not talked about because, like you said, it's not sexy. It doesn't
Not
rile
sexy enough.
people up. Nobody
Yeah.
gets angry. Nobody riots in the streets about it. Nobody
Because
donates $1
everyone's in
billion
agreement.
dollars.
The
Yeah,
Democrats say we need more housing. The Republicans say we need more housing. There's not enough contention. Nobody's disagreeing. There's not enough contention. Well, there's nothing in it for politicians.
right. It's us versus them. That's how they get paid. Neal, thank you so much for being on the call today. Thank you so much for all the things that you've done to make a difference in the world. And we really, really appreciate it. Um, how can people find you? Where can they go to find you?
Well, the easiest way is to simply Google my name. I'm lucky enough and unlucky enough to be the only Neal Bawa on the World Wide Web with this spelling. So Neal space Bawa. Find me that way. If you want to be more structured, type in Multifamily University. So this is our website where we offer education. There's no paid, there's no upsell, there's no future paid education. So go there and you'll see the 12 webinars. So you'll see the Trump webinar from last week. You'll see the one before that with Airbnb. The one that's coming up is the return of manufacturing to the United States. So it's a webinar on industrial assets and how they will benefit. So you'll see a dozen of our webinars from before that. So join that community. 1% of that community are accredited and are investors with us. The remaining 99 just continue to receive education for free forever.
That's amazing. Thank you, Neal. We'll throw that in the show notes. Again, thank you so much for being on the call. And man, just keep on going.